UK Chancellor of the Exchequer. We keep calling her Chancellor. I mean, it's like she's equivalent to Mayor. She's a Chancellor of the Exchequer. She's the Finance Director of UK PLC. Rachel Reeves will set out how she will divide more than £2 trillion in public funds in the government spending review today, setting out day-to-day budgets for government departments for the next 3 years, as well as the longer-term investment. This comes after she hiked taxes and loosened fiscal rules in October's budget. Reeves is expected to announce she's investing in Britain's renewal, aren't they all? With a centrepiece £39 billion plan for affordable housing over the next 10 years. But is it affordable for all of us, or just for the people who own flats and houses? Her speech comes on the back of more than £100 billion in infrastructure investments already announced over the past few days. Well, government ministers have spent the week tugging at the Treasury purse strings, with defence said to be amongst the biggest winners. NATO countries grappling with expectations of higher spending. Meanwhile, the Treasury reportedly refused extra funding requests from the Home Office, with the Telegraph reporting negotiations became so fraught that there was talk of the Home Secretary resigning. Goodness me, well, there's so much to play for here. Economic indicators have painted a contradictory picture since the budget. Tuesday's job figures showed the steepest rate of losses since the early days of the pandemic, with total payrolls down by more than 250,000 since October. But first quarter GDP growth came in higher than expected by both the Bank of England and the Treasury survey, and is also running significantly higher than the likes of Germany, France and the United States. Nevertheless, Labour's electoral support is ebbing, but they've got a whacking great majority, as Ian King told us last time round, with the party polling solidly below Reform UK, less than a year after its landslide victory. Ian, so many elements. Ian King joins us again. Lovely to see you. You've written extensively about this. I'll tease that in a few moments as well. But tell us what you think.
Well, this isn't a fiscal event. That's the key thing to get across. There's no tax policy announcements that are going to be made today. Rachel Reeves has said she's only going to do one of those a year, and that will be in the budget this October. We also know roughly how much she's going to spend, because she set out the overall size of the so-called spending envelope in last October's budget. So day-to-day spending up by 1.2% on average in real terms over the next 3 financial years. Capital expenditure up by 1.3% over the next 4 years. And that's probably the real showstopper. That's where Labour is going to hope that it gets some momentum going in the economy. A lot of the spending, I mean, although I mentioned that is 1.3% on average over the next 4 years, it's been front-loaded. It's all being coming at the early part of this Parliament, and the reason for that is they hope that come the next general election in 2029, voters will start to see improvements in things like social housing, in transport infrastructure and so on. You know, there's a big rail line going to be built between Manchester and Liverpool, we're told, for example.
Well, Ian, I know we brought you on to talk about the UK spending review, but you are probably the best person to ask about UK corporate activity. And in the last 24 hours, we got news that KKR has struck a deal for Assura, the British healthcare real estate investor. And I've been spending a lot of time over the last few weeks looking at private markets, and we hear over and over again PE is looking at Europe as this big opportunity. What about the UK? We've heard for years now about how cheap UK public equities are, but we haven't seen all this dry powder come to the UK. Is now actually the time? Are we starting to see the beginning of a boom here?
Yeah, potentially. It feels as though we are. I mean, Peel Hunt, the investment bank, put out some research this week suggesting there have already been 25 offers this year for UK companies valued at more than £100 million. Monday alone, you saw 3 UK companies getting taken over: Spectris, Alphawave and Oxford Ionics, which is a private company. £6 billion just in those 3 alone. So there's clearly an appetite. And the Assura deal is very, very interesting because it's a REIT. Most of the REITs in the UK have been trading at significant discounts to their net asset value. And so KKR and their partners have clearly seen some value here. Interestingly, that one was got a counter offer from another listed company, Primary Healthcare Properties, although that one was rejected by the board because they said there was too much debt involved in the business. So yeah, these stocks are going cheap. I mean, the FTSE 100 is still trading on a sort of forward PE of around 15 times, if that. I mean, that's still significantly cheaper than most of its continental European peers. You look at how well the DAX has done in Germany, for example, this year compared with the FTSE. A lot of that reflects the fact that Germany's got this sort of once-in-a-generation fiscal loosening going on.
Well, fascinating. And I think a word of warning, if you're thinking about shorting the UK market, to just bear in mind that we've got PE sort of trolling around, keeping an eye on things.